Welcome to the 10 Mil Club Standard Portfolio Meeting for the 4th week of June, 2026.
From Nashville,
It's the 10 Mil Club. It's the 10 Mil Club.
The 10 Mil Club is an informal group of people who all believe that if we could get to $10 million of net wealth, we would have the financial freedom that we desire. If you are someone who believes that, you're in the 10 Mil Club, and we welcome you. Please know that nothing we give here is financial advice, and please understand that all of these disclaimers are important. This week, we continued to see a lot of uncertainty in the market, at least from our point of view, and it was kind of a tough week to trade. But we're going to take a look at some quick items here. This is the VIX. The VIX is around 18.4. So what we're seeing is a market that's not above the magical 20 level. It's a little tough to trade because 18.4 isn't 16, but it is reasonably low so that the market shouldn't be too terribly crazy. But if we're going to pull up, this is SPYM is the S&P 500 ETF that we kind of like to follow, and really it's for no better reason than because of the share price of it. We like the fact that it's $85.76 a share instead of several $100s a share, but it essentially follows the same pattern. Now, if you've watched Dave Keller as we have and hung on Dave Keller's every word, if market misbehavior, you really need to get on Dave Keller's, every day, practically, excepting weekends. He does a market wrap-up after the market's closed, and he also does lots of other free videos, interviews, and things, and he has a premium level. Dave is fantastic at what he does. Dave says, and I believe him because I don't hold the same letters after my name that he does, and I do not have decades of experience like he does. This is not a Head and Shoulders, and it's because of the neckline. If you're looking, like if I were to put my line right there, it's not a break below the neckline, and the neckline has to be level. And this is not a Head and Shoulders. However, to me, it does show some concern in the market because, I don't know, just things I'm looking at as we get to these raised levels of price here, we end up with lower volume and then higher volume as we trade off, and we just broke below the 50-day moving average. So S&P 500, we don't really know. It's really kind of a sideways market in some ways. Participation and breadth are actually pretty good. This is the percentage of S&P 500 companies trading above their 200-day simple moving average. We're looking at 63% of S&P 500 companies trading above their 50-day moving average. We're looking at 63.5%. There was kind of a rise over the last few trading days. We're not as high as we have been at some points in the past, but we're much better than we were at points recently, especially in the onset of the Iran war. We're doing fairly well. So it's just that there's a lot of indecision sitting in the market, and at the moment, we just kind of don't know which direction the market's going to take. So you're kind of left to relying on the arm of flesh to try to figure out a way to get a positive return or to sit it out. Which one is kind of up to you as far as the decision to be made. But with that, let's get to it.
10 Mil Club.
We kind of revamped the list this week, and I'm going to go through it alphabetically and quickly in general. Some of these we own, some of these we don't. Like, for example, BBCP, concrete pumping, we don't own. Not yet. but the the DMI, which is a coalition of the DMI plus and the DI plus and the DI minus, is showing strength. The RSI is really kind of almost in overbought territory, but we're looking at upward momentum here on BBCP, so we might actually be looking into buying some concrete pumping shares here pretty quick. Probably want to break out, but we are already above the body of this first day when they had the earnings that the market liked. And then this wick is kind of where we might make some deciding here in the next few days if we see continued upward momentum. BYRN. BYRN does not have the configuration we like on the DMI yet, but we saw a lot of volume on BYRN down this way recently. And so we're on BYRN watch. We have a cross over this line. We're on kind of BYRN watch. We don't have stacked moving averages appropriately quite yet, but going to follow it. A name we have not seen over the last few weeks, Car Gurus. Even the Wall Street Journal kind of wrote Car Gurus off, and with that, Car Gurus turned and has come back and has now closed above the 50-day moving average, and we have a cross of the DI plus over the DI minus and a widening gap there and a strengthening RSI. So Car Gurus we may actually be looking at this week. We got stopped out of Vita COCO, and boy, what a stop out it was. Now, interestingly, we got stopped out at 77.73. It's now at 73.71, and it just dropped like a stone. And to be perfectly honest with you, why it did that, we don't know. Now, in technical analysis, you don't ask why. In fundamental analysis, you do. I am largely a fundamental analyst moving into technical analysis more and more. But why this happened, I don't really know. I do know that when something like this happens, usually somebody knows something that I don't know yet, and it's a good idea to be out of it. So we took a loss on Vita COCO, bought at 84.20, sold at 77.23. We can calculate that up very quickly. 84.20, 77.73 is a 7.68% loss. Took us totally by surprise, but that's the nature of the market right now. CPNG, we got the cross here. Now, this is a South Korean retailing stock, basically. And we got the cross right over here and kind of a lift. And so we're following Coupang here because it seems like this might be one to kind of begin looking at, but we don't own it yet. CVS, since we sold it, like quite literally since the moment we sold it, it has headed on up. The DMI gap is still pretty high. The RSI is still strong. We may actually be buying back into CVS to see if we can make something happen with that. And the same is actually true with Dollar General. Now, Dollar General stopped us out. We took a loss on an involuntary loss on Dollar General, and it's back at the top. Now, strongly doubt that we're going to buy Dollar General up at the top of this regression channel that we've put here, but DG, we do have an alert set for Dollar General. Duolingo, if there was a single disappointment of the week that kind of made the week stand out, this was it. We were up on Duolingo. We were doing pretty well. We had not moved the stop. Duolingo was up this way. Let me tell you it. Let me go 1 month, 1 hour on Duolingo. So we had bought Duolingo here at 128.50, had caught this swing up here. We were up, and all of a sudden, kabam! And we got stopped out on we didn't get stopped out on Duolingo during this day. We got stopped out at the very beginning of Friday, and then Duolingo spent most of the day, spent the entire day after that up. Now, it did back off. If I'm going 1 day, 1 minute, it did recover and then back off some during the day, but just the most annoying thing. And to be honest with you, probably what we'll do is, we're probably going to pick it up at a more advantageous spot. It is not perfectly advantageous right now. Let's see, 1 month, 1 hour. There we are. somewhere down in this area we would need to be. Now, Duolingo, if we're looking at it with a 6-month, 1-day time period, Duolingo has a historical volatility of about 63.8%. 63.8% is elevated, but not so volatile that we can't do something with it. So probably get back into Duolingo if we can get a decent price on it. But boy, that was the annoyance of the week, because everything, the ADX, the RSI, everything looked like we should be going the right way, and we simply hit our stop, and then the rest of the day it was up. Felt completely unjustified. We are back with ELMD. ELMD did a curve like this, crossed back over, it touched but came back with the DMI, and now is headed north and has broken out. So ELMD we will probably be doing something with here pretty quick. EPC, the market has a rotation right now going into defensive stocks. Edgewell Personal Care has a lot of brands and things that you've heard of, and it has really strong momentum, this RSI here, and of course the gap in the DMI. And so with the right entry point, we may actually pick up Edgewell Personal Care. We unsuccessfully traded it back this direction. Don't know what we would do this time, but we are above all of the averages that we watch. EVC we're still watching watching it again because now it's broken out above this level and is starting to show strength going north. EZPW we got stopped out on. It was another one of those surprise things. We thought we had it, and now it's kind of reestablished itself, headed this direction here, got the cross, got the RSI pointed the right direction, so we may be looking at EZ Corp again this week. F, or Ford Motor Company, has a turn going on right down here. We were stopped out on Ford about a week ago. We do now have the DI plus over the DI minus again, and a turn happening. Probably won't buy it very quickly, but we'll see. Fox, now, if you'll remember, Fox is buying Roku, and we got creamed on Fox because it all happened after hours and there wasn't a thing we could do about it other than sell. Now, one thing I didn't do, just to let you know, I did not fill this with things that we've been stopped out on over the past couple of weeks to check in on. Instead, I decided to look forward, because most of those things that we've been stopped out on actually are still down. Very few of them are actually above our stop price, such as the market of the nature of the indecisive market that we're in right now. So Fox is kind of starting to find a footing down this way. However, we don't have a buy indicator from the DMI yet, or the RSI or anything. It's just on here because it's fine. It's a big company. It's looking for a footing, and we may be able to find some way to make some money off of it if we get the signals that we want, but we don't have those yet. One of the few that I left on here, despite the fact that it really doesn't have those signals. GSL is interesting because it really doesn't have the signals either, but we own it. We're actually down 1.84%. We bought it at 38.51. It's at 38.779, and it's had some vacillations between then and now. If we don't get a turn in it here pretty quick, we're probably going to sell out of GSL, because we were up there for a little while. We're not now. We'll see. I cannot promise one way or the other. IIIN, we decided this week, we took a hard look at it, and if you have been paying attention on the Facebook page or the Facebook group, which I will, if I can remember, I will post a link to at the bottom of this video once we're done, but look us up on Facebook, the 10 Mil Club, just like what you got here, 10 Mil Club, 1L, 3 words, 1L. On Facebook, you can follow our page and you can join our group. We'll let you in every day. On both of those locations, I try to post what we did that day or what happened that day. So would hope that you would follow us there in more real time than this. This is more of a planning session. IIIN earnings are coming up July 16th, and because earnings have a tendency to cream this stock, mostly because it only has 19,400,000 shares, we have elected to kind of hold off on this despite the buy signals. May be a mistake. I don't know. I just know that if you look at a couple of years of this stock, earnings have a tendency to cream this stock. And so we are not too excited about it. Well, we're excited about it. We just don't want to get into it right this moment because we don't want to get killed. IVZ Invesco, we got stopped out of Invesco, and it is currently not showing us a reason to get back in. We're holding on to it just for a little bit in case this is a turn down here. So IVZ going to hang on to. This is a new one this week, El Pollo Loco. El Pollo Loco, LOCO, actually has a really good fundamental screen. We like the look of it. It has the momentum. It has the DMI signals. It has the RSI signals. If we can figure out how to enter this, we probably will. The only thing we know to do, and if anybody wants to make a comment on this, we are all ears. But if you go regression channel from this day back to the day that El Pollo Loco had the DI plus cross the DI minus, and extend to the right, we'll do that here, and then say, all right, give me an alert when it crosses below the 50% channel line right there. That is really the only thing we know to do, other than watch whether it respects moving averages and things. I mean, so let us know if you know anything else. But we are loath at the moment to buy things at the top of a channel because it just seems like we get stopped out a lot up there. So don't want to do that. MYO, this one I only kept to check in on because this week we got stopped out on it. We got stopped out at $1.14. It's now at $1.03. We'd have gotten killed even worse. And it doesn't currently have the technical indicators. So we will leave it on the holding tank, but we will take it off of the list. All right. We still are holding the PSQ Pro Shares QQQ, short QQQ, and the Pro Shares, TBF, the Pro Shares, no, sorry, that's the Treasury one. Sorry about that. There we are, SH, the Pro Shares short S&P. We are holding those on tap just in case the stock decides to go down the elevator, as Dave Keller likes to put it, and is very appropriate because it does seem like stocks and markets in general go up the escalator and down the elevator, or up the stairs and out the window, depending on what era you come from. And we're holding on to this because there's kind of a gravitational pull. It looks like it could be happening. We don't yet have the SH over the 50-day moving average, but we do have it somewhat over the 21-day EMA, and we'll see what happens. All right. Our big success of the week has been QLYS, QLYS. We are up 12.87% on this, and it is firing on all cylinders with all of the indicators going. And we may get a little bit stingy with this and move our stop up and dare it to stop us out because we just closed above the 200-day moving average. That should start putting that stock, QLYS, on people's scanners. Yeah, sorry, scanner. Should have start showing up on people's scanners because it's now over the 200-day moving average. So doing well there. This stock now, there's a little bit of danger with SCI because I actually like the company. And I know you're not supposed to fall in love with the company, but their fundamental scan is really, really good. They're a death care company. We've mentioned them for a while. We really should do a weekly deep dive on them. But you can see over here in the news, well, you can't see over there in the news here, I'll take me off. You can see over here in the news that they actually basically quadrupled their share repurchase agreement. Even they know that their stock is cheap down this way. So they quadrupled their share repurchase plan, and they have plenty of money, and they just sort of that. They have plenty of money and are just their stock's just sold off. This is one of those. They pay a nice dividend. Fundamental scan looks good. They've been paying off debt. They've been managing their capital stack very, very well. This is a good company. So anyway, SCI, we are in SCI, and we're up a touch, 2.34%. Sunoco Products Company have not had SON on the list in a little while because they really just got killed with these earnings, bad outlook. But just in the last little bit, their DMI showed this signal through here. And then they crossed over the 50-day moving average. And now they are headed up. So we'll see. It's been a little while since their earnings. Their earnings were April. So that means sometime late July. But, I mean, they can get killed on earnings again. So I don't know. We'll see. But we now have Sunoco on the watch list again. SOXX we only have on here because we were in it for a while, and I'm telling you, so this is something I've started watching right here, the historical volatility in this right here. I've added it, 81% historical volatility right now. That that ETF is volatile, and the trade, I don't care if it is higher here and there. It just looks like it's breaking down to me. Now it's above the 50-day moving average, and it's above the 50-day moving average, but and I believe this is the 21-day moving average. It's above all of them. That's 200 down here. But that amount of volatility indicates to me that there's a breakdown that's happening, and I just don't like it. We got burned twice on it, and as of yet are not back in it. STUB, STUB, big volume day on Friday, and lots of upward momentum and lots of indicators. So at the right price, you can see I have an alert set for the lower end of the regression channel back to the day that it crossed on the DMI. So probably will be buying some stuff up because it's headed the right direction now. Have to follow TMC, the metals company, only because we are the 10 mil club and it's our mascot stock. It is not showing any kind of momentum or reason for you to buy the stock. I'm not going to spend a lot of time on that. Don't buy that this week. Vera Bradley, VRA, has the crossover now on the DMI, showing RSI pointing in the right direction, has a bit of a recovery going on and pointed this direction now past earnings, and so it looks like Vera Bradley is probably something we're going to be buying into in the next little bit. And the last stock we have is Walmart, which sadly does not have the DI plus crossing the DI minus. We bought it, we were up a bit, now we're down a little bit. It seems to be riding the 200-day moving average. What are you going to do? Walmart should be a very good stock for a recession. It could well be that there's a lot going on right now that's going, you know what, we're not actually going to have a recession. But with higher interest rates coming and a lot of the things that really haven't played out through the economy yet, there's just a lot of uncertainty, a lot of push and pull in the markets, and we just don't know exactly what's happening. And so it's a bit difficult to trade, and we're getting these stop outs, and we probably will begin to be very unforgiving with our trades. And that is the way we see it. Thanks so much for joining us, for all of us in the TMC production room and our singers, Sutherland Presley and our announcer Jackson. We will see you next time on the
10